Welcome back. Motor oil maker Valvoline being spun off, raising at least $600 million in an IPO, initial public offering. It will begin trading today. This comes as a report in today's Wall Street Journal says this year is the worst year for IPO deal volume since the financial crisis. When it comes to bank fees from offerings, they are at the lowest level in 20 years. Joining us right now to take a closer look is the head of Merrill Lynch Wealth Management Portfolio, Bartels. Marian, great to see you.
Great to be back,
Maria. Thank you so much for joining us. Well, I'll tell you right now, there's a lot of excitement around Valvoline, this big deal today. It's going to be one of the bigger ones, but it's been a tough year, right, when it comes to market activity and the IPO environment?
Well, we've had what we call episodic volatility, and I've never used an adjective in front of volatility my entire career, which is brief bouts of this extreme volatility. And I think that is setting the stage for people being very nervous, especially our clients, about the markets. When it comes to the IPOs, I'm very happy to hear there's not a lot of them. And the reason for that is for the length of the market. Normally, near the peak of the market, you get extreme M&A activity, you get extreme IPO offerings, and that's one of the signals that you see that you're getting a major top in the market. So the mere fact that you're saying that the IPO market is a little soft here actually gives me very high confidence that we have longevity with this market.
Because we had a 3-day winning streak this week, James.
Yeah, I guess this is kind of the glass half full. We're not seeing any pets.com kind of nutty companies to suggest a really frothy market. But I think to me, this is kind of concerning when you look at the low number of IPOs. If it was just kind of the market at work, companies saying we don't want to pay so much to raise capital that way. But it seems like there are government roots here in terms of what regulation has done to make IPOs so expensive, the Fed putting all this money into the economy where people have other ways to raise money besides the initial public offering. Do you look at that part of it as healthy, or?
Well, I think regulation has certainly set the stage for the industry, and we're not going to change that. I feel that it hurts confidence, though, and it hurts not only individual confidence, but as you pointed out, it hurts corporate confidence. And this is going to be a long haul. What happened in 2008 and 2009 in terms of the financial crisis and everything that's happened since then, everything that's happened with, Europe, from Greece to the euro to Brexit to everything that's just happening around the world, is really setting people back. And that actually, though, Maria, gives longevity to the markets. When we even look at professionals in terms of strategists on the street and what they're recommending in terms of their asset allocation, we have a model at our firm that's called the sell side indicator, and it has one of its most bearish readings that we've ever seen. It's not the worst right now. In addition to that, we have a global fund manager survey, and globally cash levels are way above 5%, and believe it or not, several months ago reached a record all-time high, even higher than the crisis of 2008 and 2009. So this means this market has legs. Now we're in a very seasonally weak period for the market, so we can get volatility. We just got over the Fed. Now we have to get through an election, but after the worst seasonals, which are September going into October, the best seasonals happen. November, December, January. So in any pullbacks within this market, we're recommending that clients should at least look at their portfolios and rebalance if appropriate. But if you can take exposure, if you have too much cash, we do believe that this is a good time to enter the markets.
So we know that most voters in America right now are saying we think the economy is weak, and there's all these indicators that they would see the volatility in the market, all the conversations about volatility around the slow IPO market, about all of these things would indicate to folks that maybe we shouldn't be so confident in listening to how the economy is great when the administration is saying these things. What do you say about the economy?
In terms of the fundamental backdrop for
right. Well, certainly the economy has taken like a gear down. We don't go into fifth gear anymore. We're kind of like stuck maybe somewhere between third and second.
Yeah, 2%.
And that kind of has people a little bit off. But really what I do is I go around the country talking about our theme called A Transforming World. I could spend weeks talking about it, but there's some major dynamics in our economy. You have the baby boomers. They're a $15 trillion economy. They're going to impact healthcare, and with their leisure time, they're doing travel and leisure. So that's helping that industry.
Interesting.
In innovation, technology, look at where we've come in just even 10 years with technology and how that's going to drive our economy. And what we really have given up on are the millennials. We call them lazy, good for nothing, entitled. Well, these are the kids that are starting companies. They have a strong entrepreneurial spirit, and we call them a little delayed, but we do think over time they're going to have to focus on retirement and saving, and they'll most likely start realizing at some point that apartments are expensive and housing might be a little bit more appropriate for them. And there's no other developed economy that has the size of the millennials. They actually outnumber the baby boomers. And so I've just talked about X, Y, and then we even have a Z population that's coming up. So the demographics of this country are extremely positive. Nowhere else in the world do we have them.
Well, everybody's talking about your generation, Kat.
Yeah, absolutely. People need to be nicer to us. You know, everyone's like, we're lazy, I guess, sometimes, but, you know, I work very hard.
I know you do, and I think you get mislabeled. I actually compare your generation to the hippies, and that's when my audience really starts giggling, especially if I did have somebody from Woodstock in the audience.
Is that a compliment?
That is a compliment in the sense that you look a lot better. and eventually, when we look at the baby boomers, they created the greatest wealth this country ever saw. But when they were at Woodstock, nobody was saying that. So I think the millennials have a lot to offer. We're just not giving them enough credit at this point.
All right, Marianne, it sounds like you, on any pullback, you're putting money into tech and healthcare.
I'm definitely putting money in.
All right, Marianne.
Secular Bowl.
Thank you so much. Marianne Bartels joining us there.